Welcome and hello and hello and welcome. Thank you for joining us on this very important Midnight Madness episode of Un Poco Mas, the show where we give you just a little bit more. Sometimes that little bit extra is completely imperceptible. It seems like the show is just an absolute steaming pile of garbage, a dumpster fire, if you will. But believe it or not, somewhere within that madness, we are trying to give you just a little bit more, guys. Of course, the SoFi stock basically marched down all week. We all had hopes of that run to 10. I still think the stock's going to go through 10, 11. I don't really think this means anything. I think people just open up too many calls, and returders are basically too stupid to draw air. And this is the result, but I think this is breakout EPS coming. It comes for every company. They don't like 1 cent. They don't like 2 cents. They don't like sort of the hemming and hawing. They don't like the lukewarm, tone management tends to take all the time. And that's all been wiped out. And you see compelling case now for that half a point rate cut. And I think it's all but inevitable. And I think the market is not really underestimating. I think the market makers know it, and I think the street knows it, but I think retail investors and sort of the people making the purchase decisions within mutual funds, and of course, a lot of them won't buy stocks under $10 in the first place. The actual volume of originations I think these rate cuts are going to generate for SoFi is going to be more compelling than most other lenders. They're in more things, but also why there's really no impediment to refinancing, your student loans. There's no fees. It's relatively easy. You can do it with SoFi as many times as you want. As rates continue to change, you can pay it down early. I mean, to redo your mortgage is costly and it's a huge pain in the butt. These personal loans carry high interest rates. So, these really high end student loan borrowers are going to be coming in volumes that I don't think people are really fully prepared for. I mean, the big drawback, the big bear case now is if, the landing is a little bit harder, we get into a recession, we get into, higher defaults, more delinquencies in terms of the personal loan book. I mean, say personal loan delinquencies over the next year, march up by another 2%, get up near where SoFi is allowing for sort of the upper end of their projections. But you have student loan originations of refis going up, fivefold, sixfold, even more. This company has not been allowed to operate in terms of their core strategy, their core business model, which is this wheel, which is this cross selling. And there just hasn't been demand for the more profitable products, which is the lending products. And I think that's also cut into the fact of, why isn't Galileo landing more of these big fish? I know they're in the pipeline, but why aren't they putting more on the books? I think, a lot of these institutions and other companies have been very cautious with these high rates. Money's expensive. They've been hoarding their cash. They've been playing everything pretty close to the vest. So why did they walk SoFi down in these 25-cent increments this week? I mean, it all has to do with options, but it's weird because, I mean, they're definitely, as Sean Connery said, you're playing both sides. You know, Last week they were listing Max Payne, I believe, at 7, and the stock closed at 8. And then this week, I think they were listing Max Payne at 750, and the stock closes at 7. So it's clear market makers are both buying and selling options, depending on how they want to move the stock. And when they open up those contracts is also critically important, because they're obviously playing on the fears, hopes, and dreams of returders. I also wanted to change gears and talk to you guys a little bit about Nio. I know it's a Chinese stock, and many of you don't invest in Chinese companies, ADRs, and things like that. And that's absolutely fine. No problem with that. Definitely not trying to tell anybody what to buy. I just, I've been sort of trimming my Tesla position when it's up around 250, even 300, and I've been buying Nio. Of course, Nio's breaking out, and I wanted to put this in the context of I was talking a couple of weeks ago about how to build a position, because people were telling me, you're so lucky. Your average on SoFi is low fives. And like, luck has nothing to do with it. Like, it's how I look at a stock that I don't know and that's unproven. I don't buy too much all at once because these growth stocks that are pre-profit almost always crash at some point. They're very easy to attack. I mean, a company burning money is easy to attack. It's easy to generate fear. It's easy to generate FUD. It's easy to say, hey, this company's going to need to raise money. Interest rates are high. Their back's going to be against the wall, and they're completely screwed. And my name is David Chiapet, No, so it's easy to build that FUD. It's easy to drive the stock up and down. But you think it's dark days. I mean, SoFi went from a high of 28 down into the mid fours. I mean, Nio was like near 60, and they drove it all the way down into the threes. And so I want to draw a parallel to these two charts, these two stocks. What are you looking at with these two things? You're seeing a stock that's being shorted. You're seeing a stock that had some dark days. There were a lot of questions if they were going to go on. I mean, SoFi with the student loans. Nio was almost bankrupt. Of course, they had the government bail them out. I've suggested for a long time that all levels of the Chinese government are in the bag for Nio because they want to control battery swap. They want to control charging. They want to have a domestic nameplate that's a flagship. There are so many reasons the government's backing Nio, and then they have the backing of companies like Shell, BP, the big giants, Sinopec in China, the other big oil companies. They have the backing of all levels of states, and they're basically rolling, their battery swap technology out to every county in China, which I think is 2,300 counties. So they just announced the other day a big, strategic cooperation agreement with a state-owned agency to basically build out battery swap and charging infrastructure, because obviously they can't finance rolling that whole thing out to the entire country all by themselves. It's going to cost billions and billions and billions of RMB. 1 RMB or 7 RMBs is $1, some shit. Anyway, guys, heard the head honcho, the big hoagie. So when I say, you're disappointed in SoFi, obviously people that bought the top in Nio, you're just dumb. And I think if you bought SoFi near 30, you're pretty dumb, because remember at that point SoFi was selling less than $1 billion. So you're paying like 25x sales for a financial company that's burning a ton of cash. Totally different thing then and now. But people people question, well, how do you know where the bottom is? Of course you don't, but you have to use common sense. I mean, Nio was down here. Basically what I did, guys, I watched this stock. I've held shares for a long time. So I'll buy a stock and I'll just kind of watch it. I'll try to kind of get an idea where it goes, and I'll watch the how the price action tracks the fundamentals. Sometimes they track pretty normally, which is what you'd expect. That's what the market is for. It's basically to finance business activities, reward success, punish failure, etc., etc., etc. The good guy wins. He rides off with the princess. The bad guy, smells a stinky fart or whatever it is. So I forgot where I was going with any of this. But basically, when you're looking for these companies, you have to look for the share prices just being killed, but the fundamentals are rapidly turning around, and you're about to see these positive catalysts. Like, for instance, Palantir got in S&P 500. A lot of people think, SoFi could be there in a year and a half, 2 years. Who knows? But that's a very, very positive catalyst, and that could concede with 2026 when Anthony Noto needs the share price up to, exercise some of his bonuses in those shares. But what I'm talking about with a stock like Nio is, people all said, oh, this battery swap thing, it's a boondoggle. Elon Musk was one of the big detractors, said this will never work. Well, CATL, who is the leading battery manufacturer in the world, by far aims to have 10,000 battery swap stations, and they're trying to have 2,500 by 2026. Well, Nio has 2,500 already. And they have tons of other, companies signed up on their battery swap network. They have the biggest charging network in China. JP Morgan just upgraded them today. And, I just want to make a point, not for nothing, but Morgan Fudley is one of the dirtiest dogs out there. Like, they were cutting their price target on the SoFi stock as the three amigos of FUD while they were accumulating in Q2. And they're playing the same games. Like, they just cut their price target on Nio as they're, improving their margins, increasing sales, ramping up, releasing Onvo on September 19. They have all these, basically the state is supporting their power and energy infrastructure at every level. It's going to allow them to grow very, very rapidly without using much of their own capital, which is, as you could imagine, is incredibly positive. But Morgan Fudley tends to, crash stocks and then accumulate different things like that. But you had, the big call was JP Morgan coming out and raising their target price from $5.30 to $8 and going from a neutral to a buy. And that got a lot of press because JP Morgan used to be very bullish on Nio several years ago, but obviously they've fallen out of favor because their production went down. They had a lot of problems. They were releasing too many models, doing too much too fast, etc., etc., etc. But when it comes to how do you build a position, look at the chart, guys. You can look at SoFi. It doesn't matter what it is. So as this was coming down, I started buying. We reached all-time lows. When I say all-time lows, I mean it was lower than this years and years ago before they started growing as a company when they're almost bankrupt. But when I say like all-time lows, I mean, since before back here, and even there, it's almost at those lows. But yeah, back here it was like $1.50. But my point is basically after the run. So you come in here and you look at the chart, guys, you're looking for it to bottom out and gain some support. And that's where I started buying, and then here where I see, okay, it's reached all-time low again. It's stabilizing. There's buying pressure starting to come in. This is where I'm buying. And this happens to be my JP Morgan account. I have Nio and a bunch of other accounts. Schwab, Merrill Lynch. I believe I have some at SoFi, Webull in my retirement accounts. I do hold quite a bit of Nio. I don't know exactly how many shares, but lots and lots of shares. So what I do when I see these bottoms and I think the stock is really bottoming out and it's illogical and I see production ramping up and I think the margins are going to get better and I have confidence in management as I do in Nio. I think they have some really good people at the helm and I think they've hired some top-notch talent from other companies. What I do is I'm not going to lie, I've been bag holding the stock a long time. I was probably down close to 50%, but I've been able to lower my average considerably by picking up, I don't know, somewhere maybe an additional 20,000 shares, an average cost of under $4. So this is what I was talking about when I looked at the chart. I came in, end of June. So where is the 27th of June? You see that right here. So right here, the stock had basically formed this base at what I believed was going to be the low. So I'd seen about 10 days of that. I'd seen buyers and sellers. I'd seen, hey, they're not pushing this thing down anymore. Gap down. I thought it's going to fill this gap. Back up right here. Notice this gap to, where is that? $5.18. Exactly filled today. So I thought it was going to fill that gap eventually. So I was very comfortable buying right here on 627. And then, 628, I picked up another 150 shares at 417. And then on 8-1, I started buying. And then on 8-7, I really started buying. And let me show you what that looks like. So again, this huge gap down, this is coming for no reason. They're delivering a ton of cars. Onvo looks extremely promising. It's a lot cheaper than the Tesla. It's frankly... And I want to see what this new Model Y they're bringing out, I guess, late next year is going to be. But this Onvo thing looks amazing for the money. And it's going to use the same battery swap stations. Now, the difference is it can only use the Gen 4 swap stations since there's not that many of those right now. So that's going to be a big difficulty, and that's why they're trying to, build a third battery swap station factory. And I'm sorry, guys, if you're, used to watching my SoFi videos, but I've talked till I'm blue in the face about SoFi. People are like, oh, it's down. Aren't you so worried it went from $8 to $7? Absolutely not, guys. I mean, remember, this quarter's almost over now. There's only 3 weeks left, and I think guidance is good. We're going to hear from... management at, I think it's the Goldman Sachs conference coming up. When is it? Next week. So usually management always does the same thing every quarter. They come out right toward the end. They affirm guidance or they raise guidance. They say positive things about the pipeline. I don't know. I'm more than happy to talk SoFi with you guys. I think Neo coming down. I think the state is going to move this company places. I think they're already in like Norway, and the government there is very happy because they're able to stabilize the power grid, send out power when needed. So these battery swap stations perform an important function for the power grid. So the government loves these things. And they can also charge them with solar. They can charge at off-peak times. They just give the government, the power grid operator, the power company, Neo itself, Neo customers, it gives them a ton of flexibility. So it's a real win-win for customers. They can acquire the car much cheaper and a much less initial outlay of cost. And people are like, well, it's a Chinese company. Guys, China is the EV deal. I mean, that's where Tesla's building. That's where Tesla's expanding. The Cybertruck to me is a nice novelty, but what really matters is, how are they competing with companies like Neo and BYD within China? And eventually, how are they going to compete with those same companies in Europe? I mean, EV adoption is kind of slipping in the United States. It's advancing, full steam ahead in China. The penetration, I believe, last month was 50% for new electric vehicle sales. I think that also combines plug-in hybrids, if I'm not mistaken. Whew! I haven't breathed so far, guys. That's 16 minutes going strong without a breath. There's like 20 people watching. So anyway, guys, I just wanted to sort of, look at how do you build a position. You look at that bottom, you wait for it to find the bottom, and then, this is fairly representative of what I was doing throughout the accounts I hold Neo. So then on the first, I came in, I bought 1,175 shares, $4.21. I thought this was getting very close to the bottom. I thought $4 might hold. Of course, I was wrong, and that's fine. I don't mind being wrong because I took advantage, and it's going to make me an absolute fortune. So then, the same day I came in, I bought another 1,000 shares because it had dropped all the way down to 407. I waited another week. Now, why would I wait a week? Because I rushed in here on this big dip, I was panic buying. I always panic buy. Like when everyone else is panic selling, I'm just buying calmly and, chewing a stick of gum, drinking some weak tea or whatever. So then it goes even further, guys. So now we're down into the threes. And it's basically leveled off here for 3-4 days. And I'm like, okay, that's it. This has got to be the bottom. We're at the all-time low of the stock. They keep generating positive news. So I see this stock crash to all-time lows, find support there, and positive news, just piling up. That should be moving the stock much higher. I know there's a lot of risk that's carried in buying a Chinese stock, and I appreciate that, but I think that's priced in and then some. So the 7th, we just come in and buy 550 shares, 371, 500 more shares, 378, 550 shares, 378, another 1,000 shares, 373. Again, I don't just buy everything, right? You can see, I hate saying right, but I'm saying it because I watch too many Canadian returders. But I'm waiting a couple days. I want to see where the price is going to go. Maybe it's going to go lower. Maybe it's going to go to 350. I don't want to spend all my cash right now. But then again, 814, 500 more shares, see it go down 379, 500 more shares, wait till 820. So wait another week, 385. Wait another week to 828, step back down to 371, pick up another 1,000, pick up another 250 at 370, etc., etc. So that's how you build out a position. When you see a stock, when you sniff the lows like I did in June, I don't put in everything because I'm like, okay, 425 is a great price, but if you look just a few months back, the stock was down in the threes. So there's a very good chance it's going to go there because they were shorting the living hell out of this thing. Look at this short interest. I mean, keep in mind there's 2 billion shares of this stock. So yesterday, shares available goes to 0. Cost to borrow, not available. I mean, this is unheard of. There's usually millions and millions and millions of shares. So 0 shares to borrow. Cost to borrow average was up to like 10 yesterday. A lot of people thought it was going to squeeze. I wouldn't say it really squeezed, but it definitely added a little bit of buying pressure. It's just an unusual stock to be shorting from the fours. very suspect. But again, I'm not trying to say, okay, this, because again, I was red in my position that I've been holding for a couple of years, but this is what you have to do if you're going to invest in these super volatile growth stocks. You have to aggressively buy the bottom and average down. I know some people, you don't have capital, but if you're going to start a position, allocate and say, okay, I want to put $10,000 into SoFi, but I'm going to start with 2,500. I'm going to get a feel for the stock. I'm going to see where it goes. I'm not going to chase. If it runs away from me, I'm not going to buy on FOMO. I'm just going to look for something else. That's a good value. If I decide, hey, SoFi goes up and up and up, I mean, I'm going to sell, I'm going to take profits, or I'm going to hold. I'm not going to buy the top. I'm not going to buy the hype. I would never advise anybody buy this stock over 10. Not right now. I mean, why would you? It keeps going down to 6, keeps going down to 7. I mean, in the recent past, last year, it was down multiple times in the 4s. So there's just no reason you should rush in at the top of these peaks. What's SoFi going to do? I mean, who knows? I mean, it's really tough to say that the controlled sort of, falling at the speed of gravity this thing's been doing on, I mean, if you look at today, this jobs report, I know it's negative for the economy, it's negative for most stocks, but it's extremely positive for SoFi, in my opinion. It implies, a bigger rate cut is coming this month. What is it, the 18th, 19th is the Fed meeting? So that's just like 2 weeks away. And I think the demand for even personal loans, they're going to be able to be extremely selective on personal loans. But everybody's going to want to refi this record credit card debt everybody's sitting on. People with good jobs, good income, who pay their bills on time, there's really no reason they're going to want to be paying, 18, 21, 23, 25% on their, douchebag Robinhood gold-plated tiny wiener compensation card. No, Robinhood's been doing pretty good. It pulled back. I mean, a lot of the fintechs pulled back. Hood, PayPal was down today. New, I think, was down around 5% today. I'm just going by memory. And then if you look at the ARK-F, the ETF, the Fintech FinTurd ETF, I think that was down 3.5%. So SoFi was pretty much tracking that exactly. So, don't feel bad. It was just one of those days. The whole market was reacting to these jobs numbers. In the market, let's just face it, like in terms of the mega caps, the large caps, it's been overbought for some time. If you just look at the multiples, it's just very frothy, as they say. Very, very frothy. But I don't know if you guys think, what's going to happen. Is the Nio breakout going to continue to just run away? I mean, I honestly think the stock can easily go to $15. I mean, there's no saying it will. I mean, it can go back down to 3 or whatever. Anything can happen. I mean, the market makers are really trying to control it, but the shorts are really out of runway on this one. Nobody wants to dump their stock at 4. The sales and margins just, the sales top line just increased like almost 100% year on year. They just had a great print. Really, really strong ER. Vehicle margins increased to 13%, got much, much better. So, they're the number one vehicle in the premium price point in China. They have like 44% of the market. Like I said, China is EV. China's the market that matters. Like, we may not know that in America, but it really doesn't matter how many EVs you're selling in the US right now. Tesla pretty much owns that market. So until they're able to break into this market, Europe is small potatoes too. I mean, Nio's moving in aggressively to Europe, as are other players. I know Xpeng is moving in. BYD is moving in everywhere. I mean, BYD is obviously the 800-pound gorilla in the room. But, these are just two interesting stocks. I mean, I was watching these stocks for years. I've been invested in both of them for years. And many days, the short algo would treat these stocks exactly the same algorithm, exactly the same shorts. Working on both stocks. I mean, many days the graphs, the 1 days, even the weeklies, you could overlay them and they would be almost exactly the same. The ratios, the peaks, the valleys, the whole thing. So quite interesting. But I think, people say, why would you put more money into SoFi, which I have much more money in SoFi than I do in Nio, probably by a factor of at least 3. If Nio has more potential profit. Basically, if Neo has more potential to go up, why would you have more in SoFi? The answer is very obvious: less risk, higher probability that it's going to succeed. I mean, SoFi sells products that are inherently profitable, and their business model makes their margins, I think, better than the competition's going to be, and consumers like them. They have a positive image, a positive brand, they're growing. That goodwill is tremendously important and valuable. And other companies like Amex and Goldman Sachs, and they might want it, but they just don't have that mojo. And it's not free and it's not easy to build. And Noto and team have worked very, very hard to craft that. So, looking at SoFi at 7 versus Neo at 4, I think Neo can easily go to 15, where SoFi right now, I think the cap they're going to go to would be something like 15 as well. So from the starting line, they have much less upside. Like, I think Neo could 4x, SoFi could potentially 2x. I don't think that's going to happen like anytime soon. Maybe late next year or something like that. Maybe 2026. Who knows? I don't know. Could go up a lot more. A lot depends on what's going to happen. A lot depends on if there's like blockbusters at Galileo. That's the thing. The auto business is kind of boring, but there's sort of these blockbusters. Financial services, lending, a little bit boring. But both companies have very unique twists that make them far different, I think, than others in their sector. I mean, Neo obviously is the battery swap thing. And with SoFi, you have both the bank charter as well as the technology company that gives them all. People forget it's not just what they're doing in sales. That doesn't track the internal savings and why the other units are, their unit economics is so much better than it was pre-Galileo. So it's important for a lot of different reasons that may not be incredibly obvious. But yeah, still the same brave few people watching this turd. But anyway, yeah, I just want to talk about building a position where these two things are going to go. What the charts are looking like, the differences, the similarities. You can see the SoFi chart is just much more extreme, just in general. The angles, the peaks, the dips, the gaps, they're just very sort of violent. Where if you look at the Neo chart, the waves are, quite a bit smoother, but that's, there's less short on the stock, but there's a lot less shares available. So SoFi is being set up to be shorted by the same market makers I think they're accumulating going long. I mean, I think, personally, I think Goldman Sachs orchestrating the whole thing, but I think Morgan Fudley's right in there, BlackRock's right in there. A lot of players at the table. Anyway, guys, I don't know what the hell I'm talking about. Give you a check of the live short interest on SoFi. I don't know if I did that. I think they were actually shorting today a little bit. Yeah, it's still showing up almost 8. I think it's higher than that. I think has the official report come out? I think, what is it, the 6th? No, it usually comes out on the 8th or the 9th, I think. But yeah, still cost to borrow, almost nothing. They were paying people to short at one point there, 0.3. And then cost to borrow max is 4.35. So nothing extremely unusual there at all. Very sort of SoFi day in terms of the cost to borrow. They were shorting, let's see, 400,000 shares today. Got very flat. Everybody went home for the day to Connecticut. Had a bunch of martinis and caviar. Oh, it was great. Yesterday they returned. They were shorting 2 million, then they returned 2 million. So they returned 4 million there all at once. And that's really indicated. You see that in the numbers. Like, it wasn't very long ago. They said, what was it? Like, 6 months ago, I don't know, the borrowing was around 260 million. So it's all the way down to 175, and then the short interest is 185, and shares on loan are only 174. So are they short long? Are they naked short? Is the data just lagging? What's going on there? Hard to say. I'm not sophisticated enough with analyzing the flows of short interest to, really peg the dailies quite as well as some of these other turds like Midwest Values, the bullum-headed dude from Trending Stocks. But take that as you see it. Anyway, guys, welcome and hello, and welcome and hello. So no other real big news coming out with SoFi. They had the deal where Justin Herbert, the quarterback of the Chargers, is making youth sports more affordable for poor kids or something like that. SoFi likes to act like they care about poor people in the inner cities, but in my opinion, they don't. They just want to make money. It's just all bullshit. the goodwill. No, but hey, who knows? That's a good thing. It's good PR. Obviously, the Chargers tied in with the NFL. I kind of wish we had somebody on the Rams because the Rams sell a lot more tickets. Nobody's super excited about the Chargers in Los Angeles. Even Corkers can't get excited. Um, I don't know. I'm a complete idiot. Yeah, I got to wrap this thing up, guys. It's been pretty incoherent from the beginning. John Planchofi was here. Let's take a look at some of the comments. Maybe Savage of Wall Street is here to set us all straight. Let's see. John Blanjovi. No, I'm not drunk. I'm completely sober. It's totally boring, dude. How did the farmer get a girlfriend? Pause for dramatics. A tractor. Oh my God, it's hilarious. Matt Flo, welcome and hello. Air Force, yo DD, what's going on? Javier, welcome and hello. Bought more under 7, drank some filtered tap water. Have a limit order for 1,550 at 625. Yes, I do have bottled water. You guys drink what you drink. You drinking some swill, some moonshine, some homebrew. I'm getting many returders hooked on filtered tap water or plain tap water. It's cheaper. You don't have to filter it. It's much quicker, and it's basically the same thing. It's just got an off taste. Just an off taste and an off odor. Anyway, guys, I'm sweating like a whore in church. It's hotter than hell over here in beautiful, sunny Los Angeles. Of course, it's not sunny because it's almost midnight. And it's not Philadelphia, so it's not always sunny here. It actually gets dark at night, folks. Let's say hello to a few more of you guys before I shit can this turd. Put it where it belongs on the cutting room floor. There's not going to be anything left. We're going to cut everything. Want to thank, obviously, Not a Lurker, even though he's fast asleep snoring with his symmetrically shaved head. Also want to thank Alberti Bertie Aviles for not being here and not moderating. I don't know what you guys are thinking. You think you get sleep time off from your moderator duties? Where's, what the hell's Alberto's nephew's name? I made him a moderator. I'm throwing out wrenches to everybody Alberto knows. I'm afraid of his motorcycle gang. Canadians want me to buy Celsius when I use Fahrenheit. Yeah. No, I got rid of my Celsius there. I don't know why, and I bought more SoFi, Leaps, and then I'm going to buy some more Celsius, though. I know it dipped. I guess their major distributor is Pepsi, and they basically decreased the amount they're going to order for the next few quarters. So I guess they're kind of probably tracking the economy and realizing demand for everything is going to be down. So, 5 likes. That's 5 too many. Clap my dog. I don't see why anybody would like this turd. A little gap at 550. Just saying. Yeah, I mean it could go down there. It's definitely true. But there's gaps to the upside, Air Force as well. So the gaps, the whole gap filling. Sometimes it does. Sometimes it doesn't. But yeah, no, I don't need good luck, man. I'm already just got myself about even, and I'm gonna be making. I think if this thing runs, I don't know where it'll run. Probably won't get to 10, but it's looking really good right now. It's squeezing, and institutions are piling in, and it's looking pretty good. Yeah, they're just they're launching Onvo in a couple weeks, so it's just getting a ton of buzz right now. So even if it's just like a momentum trade, and you just stay in it for like the next month or 6 weeks, could do very, very well. But it just depends where you buy it. I mean, that's the main thing. It's like I said, buy the lows. To the moon, when Lambo. Savage, same clever line. SoFi, my covered calls. Yeah, covered calls are looking good. I don't know where you had them. I think what it run to, Savage, like 830. See, I think you said you were buying like 850, or you were selling 850s. I'm not sure, but yeah, a lot of people really got hammered on the covered calls who were selling them down there in the 6s, and then I think the stock ran all the way up to 830, and then it's back. Of course, if you were sold the covered calls at 8 or something, you're doing it very, very well. But just depends. Like, obviously, sell puts at the lows, sell calls at the highs. You're doing extremely well. That's the name of the game. I bought quite a bit of AI yesterday and the day before, Unity and Rivian. Yeah, I have a small Rivian position. I want to see their production. I want to see that new model come in. Very promising. Very, very promising. People are saying Rivian's going to be a player. I don't know. I think there's still a pretty good chance it goes bankrupt, honestly. But I think Lucid is going bankrupt. But God, Saudis keep pouring in money. I don't really know why. Don't know a lot about the company, the risk politics. Yeah, I mean, everybody, John, that's that's a very prudent attitude. I'm not saying it's for everyone. It's not one of my larger positions, but I did just buy, like I said, around 20,000 shares or something. Because I didn't like bag holding it, and my average I think was 7 or something. Now my average is like 5. I don't know. I have to do the math because, like I said, I own it across 5 accounts. Yeah, Savage does a ton of covered calls. Also, Birdie. A lot of the people here on the channel actually sell covered calls, John. But Savage is one of the more vocal call sellers, option sellers, I should say, because I know he does sell puts also. If you, I mean, if you're going to sell options, you have to do both. You know, you don't want to sell, covered calls on a crash. Because like I said, you guys are always saying, hey, I roll out of my calls. I roll out of my calls. You just essentially changing your position, closing your position, opening a new position. It works when you're running these strategies. They're running wheel strategies and stuff. There's a lot of really good people you can learn this stuff from on YouTube, but selling covered calls is the safest and best strategy to, increase your profits, particularly on when the market's fairly stagnant. You're just, collecting money really risk free. Now, if you're worried about getting called away, you might sell a little bit further out of the money and stuff. So it's a little bit of nuance to it. It's not quite as simple as, I might make it out, but it's not hard either. So it's, if you're holding, individual stocks, particularly these growth stocks have a lot of volatility, you get a lot more premium selling the options because that comes with the volatility. So anyway, welcome and hello and welcome. Hope everybody is having a great Friday. I'm going to just go through the rest of these few comments and bail out of here. Yeah, I mean, Thomas, I look at it. I mean, Nio was not. Nobody's going to say buy it at 57. At least not me. I mean, you got to be crazy. It's like same with SoFi when it was 28. It might have had a market cap of 26 billion or something, and they were selling like 600 million, 900 million, losing a ton of money. Didn't make any sense. But I don't think it makes sense right now to be at 7. I certainly don't think it makes sense for Nio to be at 4. Because everything's moving in the right direction for them. They just, the Chinese state is behind Nio every step of the way. I mean, they're in the bag for Nio. They want to control that battery swap standard. They want to control the charging standard. So, it is extremely risky because you have no idea what, the regulation is going to come out of China. It's just they don't have our court system. You don't have the same protections. Anything can happen. And, so that there's a huge amount of risk. But I think some of it's overblown because China does not want to make itself uninvestable. It's a legitimate business. The company's, auditing their numbers and China's a real place. It's not imaginary. But like, oh no, it's all made up. The cars are not made up, guys. These are real cars. They're being sold to real people who have real jobs. Chinese society, if you know people there and, you kind of actually watch what's going on, like they're buying cars, they're innovating extremely quickly. The middle class is there. There are buyers for these cars. BYD is by far the number one selling EV in the world. They keep increasing their sales I think last month they sold 300,000 cars or something. It's something crazy. But yeah, I mean, it is very risky to invest in China. Like, look at Alibaba, look at, some of these other companies, look at, they had the IPO scheduled, everybody was ready to go, and then, the government canceled it. The government can just take their money, force them to contribute to, citizens' wellness funds or whatever. So, sorry guys, it is hotter than the hinges of hell in here. I'm sweating like a fat guy, sweating like a fat middle-aged stock U-turder. We got barbecue here, terrified if we don't keep tariffs. Oh, yeah. I mean, barbecue, the minute these cars get here, the American companies are bankrupt. I mean, maybe they'll keep selling pickup trucks, but, I mean, BYD is putting out 4-door EV sedans that are like $16,000. And they have, like, self-drive, I mean, Xpeng just put out the Mona. It's $16,000. I mean, I know there was the result of buying some other company's assets that went bankrupt and all that stuff. I can't follow. I mean, it's harder to follow the, all the goings on, the EV wars in China. There's a lot of companies, a lot of models. They update the models like every 6 months. It's just insane. Like the timeline for updates in Europe and United States, they put out a new model like every 6 years, 5 years, 8 years. I mean, sometimes I'll keep a pickup truck like Toyota kept the last Tundra, I think, for 12 years or something like that. Chinese put out new models twice a year. I mean, it's just a different ball game. It's a totally different ball game. Yeah, if the Canadians are putting huge tariffs, but I just don't think it's going to work. Yeah, I mean, right now they definitely are. SoFi is going to be looking for 20% net margin. I think SoFi could exceed 25% margins when they scale bigger and bigger, but we'll see when we get there. Right now they're saying 20. Conservative approach and less risky covered calls. Yeah, I mean, obviously you can sell covered calls on Nio, you can sell covered calls on SoFi, you can sell covered calls on Tesla, you can sell covered calls on Microsoft. Covered calls are not the same thing as, which stocks you sell them on. But yeah, it's some people just buy a stock to do nothing but, play options on it. Other people are looking to buy a stock for the long term and then kind of play options on the side. So, you can do whatever you want. But yeah, no, I'm not all about conservative and less risk. That's boring. I like a lot of risk. I like a lot of fun stuff. I like doubling my money quick and then losing a bunch of money and the highs and the lows. So start learning about covered calls. Yeah, I mean it's a great strategy, John. It's pretty simple and you can't go wrong. It's really the best way to go. You should definitely pursue it. Talk about Waldorf Astoria, Park City, Utah during the winter with the family. Savage, whenever he goes to vacation, he rubs it in all of our faces. I mean, I wasn't buying his calls, but for those of you who are buying his calls, he's going on vacation again to Utah this time, you losers. So my challenge is to have the gamblers pay to our trip with the Japan. That's awesome, man. He sold 10 SoFi, 7 cash secured puts. That's pretty good. 45 cents. Yeah, we'll see. I mean, we'll see. It's these things move really fast with SoFi, so you got to be really nimble watching your options every single day. Look at the BISC volume during market hours. There's plenty. Oh yeah, no, it's strange. If you mean the activity, oh yeah, it's rocking. It's like a craps table after midnight that's packed, and there's like 3 people deep waiting to get a seat. So it's what are your averages? You're right. It's all money. I still don't understand why you base where you sell your calls on your average. I mean, I understand what you're saying, but I don't buy that. I will let you know what I see. Cool, Matt. Awesome. Be a fly on the wall. First step is the hardest, but you got to go in all the way. Rivian is scary. Yeah, would not. I mean, if I look at the opportunity with Nio and Rivian, I don't even think it's even close. I don't know why people are buying Rivian right now. Yeah, I mean, VW is not going, but VW going bankrupt by the end of next year. I'm not hearing that. When the stocks go up, you're gonna sell puts. You're gonna keep selling calls. My average on Rivian is like 9. I keep taking premiums on covered calls. Yeah, no, it's great. Yeah, 4 to 8%. Annualize it. I mean, it's incredible. It's, between 48 and some percentage. 96. I can't do multiplication. I'm getting too old. I need my calculator. I need my phone. If you're scared, you must go to church. Never invest. Stocks takes a shit. Yeah, I mean, there's nothing to be scared of selling covered calls. It's nothing. I mean, the worst thing that happens is you get called away and your stock's going to have gone up and you're going to have made your premium. So you're going to have made quite a bit of money. So that's the worst that can happen. You can always, close your position, open a new position before that happens. So, That's what they call rolling, these kids. So yeah, it's not and it's not, you don't just sell them in a vacuum. You can use other strategies along with that to either put risk on, take risk off. A guy like Felix is one of the big guys on YouTube who, talks about the strangles and the straddles and all those types of strategies where you're putting in multiple legs of the trade to reduce the risk and increase the likelihood that you make money. Now, you're not going to make as much as you would with, something that's just sort of naked and going nuts. But the idea with these option strategies is not to hit a home run. The idea is, you make a return every single time, or 80% of the time, or 85% of the time, or 75% of the time, just depending on, how aggressive you want to be. And you're just going to consistently make profits with your options year after year after year. That's the idea. You don't want to go too nuts. Let's see. John Blonde Jovi, just sort. Yeah, no, that I still don't understand why you wouldn't want to sell him. Why you want to sell him, but depending where your average is. What does that do for you? Maybe I'm just missing it. Oh, no way, John. It's all good, man. The show was going nowhere, so have fun, man. Don't worry about it. Let's see. So anybody else here? I think that's pretty much it, guys. This show has run out of steam in a big way. Hope everybody has a great weekend. It's Rivian is scary. Let's see. Rivian. Yeah, no, these are we already saw. Yeah, don't get scared. You guys are all, you're all talking covered calls. Love it when the market goes down. Rivian's just not my bag. But yeah, I mean, it's all where you buy, guys. It's not what you buy, it's where you buy. And then what do you do with it? So anyway, guys, thanks for coming by. Sorry the show was, sort of crappy. But what are you going to do? It's free. What can you do? I'm not charging you guys anything. I'm not selling you anything. But, Savage is absolutely right. Sell covered calls. It doesn't cost you anything. And, let's see. We got Syntrix in the house. Buying a Tesla with their own. Yeah, buy Tesla with your covered call premiums. Why not? That sounds like a good deal. Savage is taking his on vacations. Why not? It's good stuff. Fireside chat, 11:30 a.m. Monday. Should be bullish. Low CPI print Wednesday. Options open. And yeah, I mean, it went into 8 for no particular reason. And we see. It should have been a big catalyst today. Should have gone up, but shoulda, woulda, coulda. It doesn't matter. It was up, I think, 2-3 points pre-market, and I knew it was going to go back down because you knew this thing was going to fall apart. Because the NASDAQ, and it's just overvalued. It's going to suck the whole market down. NVIDIA's pulling the whole market down. Tesla's pulling the whole market down. Tesla did one of their, head fake fugazis where they say, hey, next year we should have full self-driving in China and Europe. Stock jumped up like 8%, but they don't know that. There's no regulatory announcements. There's no legal announcements. There are no filings. Just some statement. I hope they do. I still have quite a bit of Tesla, so I hope they do. But I don't think there's any guarantee, and I highly, highly doubt they're going to get full self-driving out in Europe. They might get them to start trying it in China. What's up, Bum Rocket? How you doing? They're going to talk, Tech Galley. I don't want to hear any more talk. Talk is cheap. I want to see some numbers. I want to see some revenues. They talked about it the last few quarters. They talked about that they're going to be bringing in revenues, but they haven't done it thus far. It's been, year on year, the accounts have grown 30%, which isn't too bad. Revenues only grew around 9%. They had 95 million. I think the street was looking for around 100 million, so not great. But anyway, guys, really appreciate it. Not much going on in terms of the SoFi. Obviously went up, then it went down, but fundamentally, everything was really, really good. We'll hear at the fireside chat if management has any concerns or if they remain as bullish as they have been. I think they will. Like I said, if you get, defaults going up a percent, but you get a massive increase in originations in home loan, student loan, credit card, personal loan, it's going to outweigh the, negatives you're going to get in terms of the loan book multiple times. It's not a problem. I mean, if SoFi's originations go insane, they can start using their warehouse facilities again. They can start borrowing money at lower rates, lending it at higher rates for the personal loans. Their lending capacity is not a problem. They're not balance sheet constrained. I think that's a complete made up point. So we'll just have to see what happens, guys. It can go down, it can go up, it can go sideways. We just don't know. So anyway, hope everybody has a wonderful, wonderful evening. And good luck. Sell those covered calls. Take them vacations. Buy them Teslas. I don't know. Don't buy anything that you think is going to go bankrupt because you're probably not going to be able to get the parts for it. But doesn't Tesla self-driving have major issues? Yeah, I mean, it does, but it's still far, far safer than a human-driven vehicle. It has different issues than humans, but yes, it does have issues running into emergency vehicles. But again, those get highly amplified in the press, and they're few and far between. And full self-driving is getting better and better, but it's not perfect. It's not ready for prime time. It's not ready to go out completely unsupervised. I mean, you can watch on YouTube and see the full self-driving videos and how much they have to intervene. It gets less and less over time, but certain situations still trick it. They send it back to Tesla. They retrain the algo just over and over again. So it's always learning. It's always getting better. It's incredibly impressive. I don't think it's ready for just driving around by itself. I don't think it's going to work. It's been somewhat disastrous, like Waymo and stuff, but those are dumb compared to how Tesla works, sort of end-to-end technology. So anyway, I don't know enough about it to know if it's going to get regulatory approval. I don't see it happening for years in the United States where these things are just driving around with no driver driving taxi. Maybe I'm wrong. Maybe it'll be a year or two. I think it'll be more like 5 years. But I hope I'm wrong because it's going to be really, really good for Tesla shareholders. I buy stock with premium monies. These are percentages. Take 25% from me, 25% buy more stock. So I buy more stock with premium. Okay, good. Awesome, Savage. Have a good one, buddy. You guys have a great night. It's Un Poco Moss, Sofi, Nio, Hurricane Lopez. We'll talk again at you real soon. Have a good one, guys. Thanks a lot. Bye-bye.